Taxes and the rich. How the rich avoid paying taxes. A more intensive look uncovers that essentially everything Americans do indeed settle charges. To be sure, while a few families don't make a good on government annual expenses, these families do pay different types of charges. Hi, good day. This is Finance Boss. Today, let's talk about how to avoid paying taxes. But first, like, subscribe, and share this video to spread the knowledge. The individuals who center only around the government personal assessment disregard one of the main bureaucratic taxation rates on laborers, the finance charge. A citizen is an individual or company who pays burdens yearly on their profit according to the arrangements of the Income Tax Act. When you document annual assessment forms and reveal your income, it becomes lawful. Let's give each of these types of people a name. We will call the willful taxpayer Paul and the tax avoider Jack. To Paul, when the government comes knocking at the end of the year, he doesn't see it as a big deal. Earning $40,000 a year, Paul hands over his $15 worth of income taxes and moves on about his life. Sure, he would love to keep more of the $15,000, but he sees paying taxes as a normal part of life. Jack, on the other hand, is a medium-sized business owner who draws himself a salary from the tech company he owns and built from scratch. Jack has over 50 employees working for him and has seen his business grow year over year. Unlike Paul, Jack despises tax and he thinks to himself, how can the government, who played no part in making his business's success, take such a huge chunk of his money for nothing? To make matters worse, being taxed personally and by being a business owner, Jack is subject to just about every tax imaginable, such as personal income tax, sales tax, excise tax, property tax, and investment tax. With all these potential taxes being applied to his income, Jack decided to look into how big corporations avoid paying taxes. After hearing that in 2018, Amazon paid zero income tax even though they earned over $200 billion in revenues that year. Determined to avoid losing a sizable chunk of his earnings to tax, Jack looked into ways he could cut down on the amount of corporate tax his business pays and reduce his own personal tax bill. In his hunt for tax strategies, Jack came across the following techniques. Number 1. Writing off expenses. Given that most rich individuals earn their fortunes through a business, this gives them the opportunity to write off expenses and their taxable income. You see, most expenses you occur in your day-to-day business operations can be written off against your income to lower your taxes payable. As the owner of the business, if you decide to take a trip for a conference to develop your skills in digital marketing, you can decide to write that off as well. Number 2. Diverting income. As of 2017, the United States corporate income tax rate was reduced from 35% to 21%. And while this offered many companies, Amazon included, the opportunity to significantly reduce their income tax payable, many companies still elect to recognize their income in countries with even lower tax rates. Whatever you earn to keep, of course, without any calculations, it's obvious that this is a significant savings to any business who can realize their income overseas. But just how much would this save you if you had set up a tax haven in this country? Let's say your business earned $5 million last year. Instead of paying an income tax of 35% for $1,750,000, you would instead pay nothing and keep that almost $2 million for yourself. Besides, allowing you to realize income tax-free, the CANE have very strict banking laws designed to protect banking privacy. The country does not have any tax treaties with other nations, thus guarding the finances of its offshore banking clients from the tax authorities of other countries. Moreover, offshore corporations in the Caymans are not required to submit financial reports to any Caymans government authority. An incorporation in the Caymans is a very simple, streamlined process. Number 3. Netting revenues against losses. If you've ever looked at the stats in favor of starting a business, then you will know just how bleak they can be. The numbers show that 20% of small businesses fail in their first year, 30% of small businesses fail in their second year, and 50% of small businesses fail after 5 years in business. Finally, 70% of small business owners fail in their 10th year in business. With the chance of success in business being rather low, there are still numerous companies that succeed and make a fortune. You see, most businesses require a few years in operation before they start turning a profit, and in years where business is not exactly booming, losses are bound to be incurred. These losses, while unfortunate at the time, are excellent tax avoidance tools for future periods. Number 4. Issuing stock options. Another way businesses reduce their taxes is by issuing stock options to its stakeholders. This method is particularly convenient for businesses for two reasons. Number 1, its book is an expense which will reduce profits and ultimately the amount of money that is subject to tax. And number 2, it does not result in a cash outflow for the business. You see, when stocks are issued, they are booked as an expense for accounting purposes, but no cash changes hands. This means that the company can reduce its profits through the expense and maintain a strong cash position. Moreover, companies that use this strategy gain the benefits realized by incentivizing their shareholders to further increase the stock price. If you own stock in the company you work for, wouldn't you put an extra effort in order to make the company's stock value rise so that you could cash out your options for more money? With these 4 corporate tax strategies in mind, Jack is starting to feel more confident that he can reduce or eliminate his corporate tax bill. But he knows that he needs to withdraw some income from his business in order to live. And once that cash is minimally taxed, he decides to switch gears and look into ways he can reduce his personal tax owing. Number 5. Leveraging geographical tax laws. Jack is seeing a large chunk of his income being handed over to his state government, with even more being passed along at the federal level. While federal taxes can't be avoided, Jack wonders what he can do to avoid some of the other taxes he's being subject to that are eroding his personal wealth. Number 6. Investing in real estate. Part of the reason the rich continue to get richer is that they make their money work for them. When you buy a property, you are acquiring a depreciable asset, and because the asset reduces in value over time, from an accounting perspective, you are able to deduct depreciation and reduce the amount of income that is subject to tax. Common deductible expenses include repairs to the property and mortgage interest, and the more money you spend on expenses, the more you can reduce your tax selling. However, once a property is fully depreciated, what do? You sell that property and buy a new one. It will allow you to defer the tax you paid on selling the property. Number 7. Deferring income. The most common tax deferral vehicle is an individual retirement account or an IRA, which allows you to move your income into a fund and subject your earnings to tax at a later date. If you're an employee, you probably use this type of account to hold your savings and allow them to grow over time. You see, when you contribute to your IRA, you don't need to pay any taxes in the year you contribute, and instead, pay tax when you withdraw all the funds, which is typically during retirement. However, during retirement, you'll probably be earning much less than $500,000, meaning that the money you withdraw will be taxed at a lower rate, and the difference in tax rates is how much you would have saved by using this income deferral technique. With every one of these tax avoidance ideas, you just have one question to answer to which kind of taxpayer you will be from this point forward, a Paul or a Jack. For the time being, that's it. Thank you for watching. Remember to like, share, and subscribe. This is Finance Boss. Have an incredible day. Adios.